Hello everyone, welcome to Bulma FX class. Let us talk about how to draw psychological killables. Sorry, we have already talked about how to draw psychological killables. Let us talk about how to identify ladder points, because we said if market is moving with high impulse, we don't just enter anyhow because it is trending. We have to get strategic points to enter. Now we are going to consider crash 1000 for that purpose. Initially, for those of us that have been with us, we talked about how to draw psychological key levels, which this 8700 you are seeing is one of them. 9000 is one of them. We are going to draw a few more in between because this is the most recent market. So we are looking for another psychological level around 8800. Let me edit this one and make sure that it is perfect. 8800, yes, you see it here. Now we are going to draw another one in between, which is supposed to be 8900. If you could remember, we said psychological key levels are mere whole numbers, which most traders look at as their point of either take profit, either placing pending orders or stop losses. Now 8900, we are going to see another one. Now look at this. You see, looking at the most recent part of the market, which is this, you can see that the market is actually trending up. The market is actually trending up. Now let's see, you notice it's trending up, so it is an uptrend. Now let's say you noticed when this market pump, we are considering H1 to do this. Let's say you noticed when the market pumped from this psychological key level to this point, but upon realizing that, you just decided to enter a buy because you see it buying. I'm sorry, if you do that, you're going to fail, because you can see that immediately after it retraced down here. It takes patience for someone to enter market at this level and then wait for it to come down. Before you know it, if your account is small, this fullback can blow your account. So we said you should always wait for the market to retrace back. We call it retracement or fullback. Now it came here. Once you see it on this psychological level, because it is uptrend, then you should wait to see candlesticks that shows a buy, then you buy, which is this another impulse that you are seeing here. So now let's talk about the ladder points. This is a ladder point. Why? Because it is a point where market reversed after fullback. Let me draw one here like this. This is a ladder point, and it is, you can see it is technically on the very key level that we are talking about, which is 8800. The next one, you can physically see it, is this one. The market impulse pushed upward like this from here, and then there was an impulse, there was a retracement from this point to this key level, and then afterwards what happened? You wait for you wait for a reversal candle to tell you that the market has reversed. Now from here you can see that these candles are bulls, and they're telling you that the market has continued upward. The next key level you can see is this one, which could have been another ladder point. So from here you can practically see that most ladder points happens at the psychological key levels. So that is why the psychological key levels are very important. The ladder key point, the ladder points are very important when you want to catch the trend. Trend must always be your friend. This one is an uptrend, so whenever you see this type of movement in the market, what you are supposed to do is only look for a buy position. only look towards opening a buy order, but you are not supposed to just anyhow open a buy order until you wait for retracement, for the market to retrace. Now I'm telling you, one of the best points where market retraces are the psychological key levels. At times, when you go to lower time frame, it might not be retracing on psychological key levels, but at least you should know that whenever there is retracement, like here, and the market continues, that is a ladder point. If your aim is to continue buying, you need to wait until when this happens, then you continue. Even at, let's, if we come back here, you see. So whenever you are taking a trade, make sure, you see, this is another key level, and you see how market respected this level. It crosses it like 1, 2, 3, 4, 5, 6, 7, 8, 9 at the same time. It crosses that, it bounced on that 8,700 key level 8 times. So this is another important level to look at. So in summary, after market retraces, that is when you need to enter, when you need to open a position along the main trend. How do you determine the main trend? You go to higher time frame, at least H1 or H4, to identify where the market is heading to. After that, then you come to, let's say, lower time frames like M30 or M15 to identify your ladder points. That's where market retraces. After retracement, then you open an order and you continue. So that is how you identify ladder points, and that is where you are supposed to open positions when you are trading. Thank you very much.